Nuno, thank you very much for being here today. We are here in Portugal, in Lisbon, trying to understand the opportunities for the real estate market. But before we go there, can you tell us a little bit more about you and your company, please?
Thank you so much for having me and for the invitation. It's obviously a pleasure to have you around in the city, and my pleasure. So my name is Nuno Azevedo Neves. I'm the managing partner, and I'm also the head of the M&A and finance practice at DLA Piper in Lisbon. And a big part of my life is about M&A transactions and financing transactions in the real estate sector.
Perfect.
So, right
Perfect.
spot to be.
Let's talk about fundraising. How challenging it is to fundraise nowadays, and how do you see that happening in the near future?
Well, if you look about fundraising is difficult, no matter where you are in the world. I think that you have some structural reasons and you have some conjunctural reasons. Now, in Portugal, obviously the size of the tickets is one of the issues. You know, you have a lot of investors that are looking at big opportunities, big numbers, and you don't have that many opportunities in the country. So it's a question of fine-tuning to the investors looking at the right size. I think the second one is pretty much a conjunctural issue, which is a couple of years ago we had an NPL ratio in Portugal of more than 20%. It has dramatically reduced in the last few years. So that means that you had a lot of space for the NPL portfolio transactions, for the opportunistic funds to find opportunity. Now with the material reduction it had in the last few years, you don't have as many opportunities in those kind of projects, meaning that there needs to be found a different driver. The third point I would like to mention is that as a result of the previous point, global investors also are looking for geographic competition, as I normally say. So they invest in several countries, they look for specific levels of return, and they want to make sure if the Portugal is giving the return they are looking for, or if they would go in other countries they are also investing in. So it's a question of trying to fine-tune to the right of projects you want. And that brings, I think, the most important at this moment is the issue about liquidity and interest rates. So you know that there is a lot of money out there, but you also know that there is a lot of issues about interest rates, and that does affect several kind of projects that are leveraged. That does affect as well for investors the liquidity of the transactions, meaning they have a lot of projects to be sold that have not been sold because there is a gap between the asking and the buying price. And if they don't sell, they are not investing again in the market. So a number of situations that both from the structural and also on the conjunctural side that make it difficult of capability to raise a lot of cash, but I wouldn't say that there is a lack of cash in the market because there isn't.
Perfect. And a lot has been said about debt versus equity nowadays, and also I want to understand, how do you see this trend about debt versus equity? What do you see happening more often nowadays? And also, what do you see as the future? What's the, not long term, but short term trends for the balance between equity and debt?
As a lawyer, a lot of the transactions I see are going already into the execution phase. Obviously, I do discuss with several investors and understand the trends. And I would say that in the last few years that there's been an increase of interest for debt. The reason being the increase of interest rates does put a situation where there is a trend to that. But still, I do think that there are a number of challenges now that the interest rates will probably start decreasing in Europe today, hopefully, let's see. And at the same time, I think that's pretty much associated with alternative credit providers. I'd say that until the year previous to COVID, we were doing two-digit number of transactions per year on alternative credit providers, so they were very active in the market. They could be very agnostic between debt and credit. We have seen a decrease about their participation in the Portuguese market. Obviously, Portugal is a market that is pretty much connected on the traditional financing by banks, but with the increase of foreign investors in the country, I think that trend although it has stopped a little during this period of high interest rates, I think it will come back. And there will be a need to match not only between, debt and equity, and that will pretty much depend on the type of investors that will be pursuing the opportunities if the interest rate so allows, and also on the nationality of the investors, because I do see differences if the borrower is a Portuguese entity or is a foreign entity, and that could also impact the way they would go one way or the other. A last comment that we don't see very much in Portugal. We've done a couple of transactions in that sign, but we see it a lot in other jurisdictions where we operate, which is the hybrid products. From unitranche to different layers of financiers. This is something that we have been setting up sometimes in Portugal, but it's not yet mainstream, let's put it this way, and could be an alternative. But again, I think it always depends what kind of assets are we talking about, what's the profile of the investor, what they are looking for, it's short-term, mid-term, long-term, what's the upside, so it really depends on several aspects.
Let's talk about a final question about financing. What risks do you see as very critical and one should bear in mind when it comes to financing and limiting financing viability?
Listen, I think you don't have a straight answer that goes through everybody. If it's a foreign investor, obviously you have the tax issue that you need to design the proper structure, understand throughout the life of the financing, or if it's an equity investment of the equity, what's the cost of investing, what is the cost of then selling, and how to export the money with the less tax burden possible. So tax is obviously for foreign investors a key material issue, but then also have a level of confidence in the market. And in our sessions today, we were talking about this urban planning material change in the market. Obviously, that is something of concern to a lot of investors. How will it impact on the timing? If it's a development on the timing of the project, and that represents a lot of money, obviously. And then I think it really depends, again, on the class of assets. I mean, if it's retail and offices now are a little bit a challenge, but residential, hospitality, students, residents, I think you name it. I think each class of assets has its own specific challenges. But like in any other project across the world. So I would not see like a big issue other than to have a proper tax planning, to have a proper knowledge about the licensing and avoid traps that could exist in the process. And those will depend pretty much not only on the new law, but on the type of assets. And other than that, that's, I think, the normal challenges. Obviously, there is one we can't control, which is the impact of interest rates and how that will affect the cost of money, because a couple of years ago there was a big gap between the bridge loans or the mezzanine loans vis-a-vis a traditional loan. Now the gap is being reduced. How the market will impact now that returns on that level are not that far from the equity return. So I think there will be a lot of challenges there as well, and a lot of issues to be addressed by investors when we are thinking about a long-term investment.
Perfect. Thank you very much, Nuno.
No, my pleasure. Thank you so much.